contents of the show is for educational, informational, and entertainment purposes only and is not intended or viewed as trade recommendations or a substitute for professional financial advice of any kind. Please consult your own financial professional for specific advice that applies in your unique situation.
You're listening to the 12 Days of Investing, where we go over real action steps anyone can take to change their financial lives. If you're looking to learn how to get started with investing without all the hype, you've come to the right place. Stay tuned and join us on happyfinancials.com, your home for plans, strategies, and investment info online.
My name is Nick Caracappa, president of Silverton Management.
I'm Steven, founder of Epik Capital Partners and president of VidaBox LLC.
And we present to you the fourth day of investing. So we're on the third cornerstone now, and that will be disability insurance. Here's my big question, and many of the viewers or the listeners will have the same, is life insurance enough?
Well, unfortunately, the answer is no. One of the major reasons why is that just life insurance by itself doesn't really cover the cost of unanticipated events, things like getting hurt, if you're now losing income because now you're injured in an accident. So, for example, do you know what the most common cause of bankruptcy in the U.S. is?
Only because I read the script. It's medical bills.
Yep, that's right. So what ends up happening is that disease and disability actually has wiped out more wealth in the United States than any other cost. So statistically, women actually have about a 1 in 4 chance of becoming disabled for 3 months or more during some point in their working career. And once they're disabled, they have more than 1/3 of a chance of being disabled lasting for 5 years or longer, with the average disability of lasting for about 82 months. So that's a little bit under 7 years. For men, we have got a 1 in 5 chance, and for smokers, we've got even worse odds. Just, off the top of your head, Nick, I mean, how many people do you know that's been disabled for 6 months or more?
Honestly, I can't think of too many of my colleagues, but maybe I can think of some of their parents that have been.
Yeah, unfortunately, besides the fact that it makes me feel old, the honest truth is that even with things like the mortgage, living expenses, and other bills, they won't stop when you actually become disabled and you can't work anymore. So bottom line is, it's also not practical to build an emergency reserve fund lasting for the 7 years or even having a 5-year fund. So disability insurance becomes income replacement. And much like life insurance, you hope that you never have to make a claim, but if you do need it, it's there.
So, Steven, what action steps do you recommend?
I recommend finding a policy to provide you with guaranteed, renewable, fixed rates. And what that means is that unlike a lot of other policies that generally do have fixed rates, a lot of companies that do quote out disability insurance, they may give you guaranteed renewable, but the rates aren't fixed. So let's just say now the company finds out that, oh gosh, you have now cancer or you have some other, terrible disease. They may decide to turn around and say, well, we'll still insure you, but the premium now is going to be $10,000 a year. And obviously that just doesn't work. So when you do get a quote, you generally do get quoted for rates at 30, 60, 90, or 180 days exclusionary period. And what this exclusionary period means is that during those days that you're actually disabled, you won't get paid out. But that's where your emergency reserve fund kicks in.
Oh, you know what? I'm starting to see some of this come together. And also I can personally attest to it, working in real estate, and also I used to work in the auto industry. A lot of times that requires financing, and for the people who were looking for financing, it was very difficult for them if they had hit a hard time, and if they had disability insurance, they wouldn't have that problem. So also, accidents can really do quite a number to your credit.
Yeah, absolutely. And, all of these problems that come up, unfortunately, you can't anticipate for it. And that's exactly the reason why insurance is needed. So all of our listeners, I recommend taking action sooner rather than later. Just like life insurance, it's cheaper to actually buy disability insurance when you're young, especially when you have no or maybe only just minor health issues. And at that point, there's no exclusions for those particular points. At the same time, what's also nice about disability insurance is that when you're actually buying a policy and gets quoted out, it's getting quoted out not only at your younger age, but say if you have a desk job right now, it's going to be attached to your occupation at that point. So that, let's just say 2 years from now, after you get your initial policy, you decide to become a daredevil, they would still have to honor that particular rate as long as you're getting a guaranteed, renewable, fixed policy.
Like jumping out of perfectly good airplanes, I guess would be one of them.
Exactly. So one of the things I recommend along with taking action is start looking and researching into disability insurance options. One company that I've bought from before is Guardian. They're excellent, where they do provide guaranteed renewable fixed rates. And from there, we should be able now to cover ourselves for a lot of these unanticipated events that come up.
Me personally, I actually have disability insurance through my life insurance policy. as well. I guess that is also another place to start.
Yes, that's absolutely right. One other thing to go over is that a lot of people, they may actually have a disability policy through their work as well. Just keep in mind that if your work is actually paying the premiums and you do need to use it, the income that comes in is actually considered pre-tax. Whereas then if you buy your own policy, it's actually considered post-tax and you don't get taxed on your income. So just something to seriously think about in terms of your research.
All right, great, Stephen. And my name is Nick.
I'm Steven.
We are signing off onto the 5th day of investing.
This podcast is sponsored by Epik Capital Partners, happyfinancials.com, and Silverton Management. Thanks for listening.